In this video, I'll discuss how to evaluate and buy stocks with an online broker, and we're starting right now. Hey, what's up everybody, and welcome to another video from the Keystone Financial Academy. My name is Elliot, and if you're new to this channel and you're interested in personal finance, investing in real estate, I invite you to join our community by subscribing and turning on notifications so you don't miss any of the upcoming videos on these topics. Okay, so let's talk about evaluating and buying stocks. For most of my videos thus far, I present a lot of theory on the various financial instruments you can use to invest with, such as mutual funds, ETFs, and of course a lot about stocks. What I haven't yet talked about is the actual hands-on process of evaluating stocks and deciding which ones to buy or not to buy. Now, the process of actually buying the stocks is pretty straightforward. However, determining if the stock is a smart buy and why or why not is a bit more challenging and requires some thought and a little bit of analysis. Now, just to be clear, the stock evaluations I'm going to talk about is not true fundamental analysis. We're not dissecting the company and its financial statements as much as the stock itself. Fundamental analysis is an important and major topic for another video. And today I will just focus on the properties of a stock. And this information is something I think all investors should know and be familiar with before they hit that buy button. So first off, let's talk about the online broker that I'll be using while showing you all this information. My go-to broker is TD Ameritrade. You could say I'm old school. TDA has been around for a while, and I really like its interface and its top-notch research tools. Now, I'm not sponsored by them, and I'm not officially endorsing them or anything like that, but I do personally recommend them, and this is the online broker that I use in all my videos. Of course, there are dozens of other online brokers, and I actually will do a video on them in the near future. What's important is that they offer tools so you can do research on the stocks or funds that you're looking to buy, and most of them have that. Next, we need a stock to look at and evaluate. I'm going to pick Microsoft only because it's such a well-known company and such a well-known stock. Alright, so let's jump inside my computer and do a little bit of a tour of the Microsoft stock. Okay, so here we are on the TD Ameritrade site looking at Microsoft. Now, there's definitely a lot of info to process here, and you can look at all this as pieces of information that together paints a fairly complete picture of the stock you're interested in possibly buying. Now, don't get bogged down in specific numbers too much because they will change from day to day and of course from stock to stock, but the concepts won't, and that's what's important. And you should be able to research this info and find it with other online broker sites as well, and even on just regular financial sites. So none of this is unique to TD Ameritrade, but I do like the way they present it. So looking at the top area, there's some information about the stock. It is traded on NASDAQ, and it is a large cap growth stock. So above 10 billion is large cap, and Microsoft's market cap is 1.7 trillion, so definitely qualifies. There's actually a company profile right here. And if you want to know the basics of the company more, feel free to read it. Of course, most people know about Microsoft, but you're going to research a lot of stocks that you don't know about, and this is a great place to read a little bit about the company. All right, I'm going to go ahead and close that. Now, as you go over to the right, the first item of importance here is the bid and ask spread. This spread is the difference between the highest price that a buyer is willing to pay for an asset, the bid, which represents demand, and the lowest price that a seller is willing to accept, the ask, which represents supply. You generally want the bid ask prices to be close together, as a narrow bid-ask spread ensures that there is a ready buyer or a ready seller for the stock, as there's a very close agreement on the price and the stock is liquid. The bid-ask spread is actually one of the measures of liquidity, so you want this to be as close together as possible. In Microsoft's case, it is 219.67 for the bid, 219.71 for the ask, only a 4-penny difference between us. That is pretty close. That's what you want to see. Right next to it is another important parameter, the stock's volume, which is 26,040,761 at this moment in time. This is how many shares changed hands during the day so far. Now, this number is pretty high, indicating an excellent volume and liquidity, as would be expected of a major stock like Microsoft. You want to be careful in trading low volume stocks, as you may see with microcaps, smaller companies, and completely stay away from any stock with a daily volume of less than 100,000, because you may have a lot of problems selling it in a much smaller market. Okay, so those were two items right there that you should look for on any stock analysis: a narrow bid-ask spread and a high trading volume. Okay, let's keep going with the summary tab. Most of the info on the left column is just information on the stock's price movement, so we'll move on to the right column right here. and land on the PE ratio, which is the price to earnings ratio, and it measures if a stock is expensive in relation to its peers. It says here that Microsoft trades at 37.55 times its earnings, which seems like a lot. The S&P average is in the 15 to 16 times range, but compared to other software companies, that's actually below average. Remember, it's compared to the peers, and the median in software industry is actually currently around 59, so Microsoft is actually not currently overvalued, which would explain why its stock is still being snapped up by investors. So the PE ratio is the third major item to look at. Now, moving down the column, a quick mention that Microsoft is in fact a dividend-paying stock and a growth stock, which is not too common, but its dividend is not really that high right now. So for you dividend stock investors, its annual dividend is only $2.04 or 0.94%, that's per share, which is not a lot. But Microsoft has no incentive to raise its dividend right now because it figures shareholders are getting plenty of profit from rising stock values, and they're just reinvesting all their profits into growth more than paying fat dividends. Companies that do not grow as fast as Microsoft do pay larger dividends, as that is their way of attracting investor money. Microsoft, however, does not feel that it needs to do this at this point in time, and they're right. Okay, moving on, item number 4 and 5 that I want you to take a look at is beta and percent held by institutions. Let's take a look at these one at a time. Beta is a measure of volatility or sharp movement of the stock, and anything below 1 means the stock is less volatile than the market. Anything above a 1 means it's more volatile. So if you're a buy and hold investor or a dividend investor, you generally don't want a volatile stock. However, if you're doing day trading, you do want volatility, as that is where you make your profit. So Microsoft might not be too good for day traders. The stock is fairly non-volatile, but it's great for buy and hold investors. Below that is the percentage of outstanding shares that are owned by institutional investors, such as mutual funds, hedge funds, etc. High institutional ownership percentage is generally a positive sign, as these organizations employ teams of analysts and do extensive research before buying a stock, so it's considered smart money to invest in what they invest in, and 70+% of institutional ownership is considered excellent. Okay, so those are items number 4 and 5. Look for beta under 1 and a high percentage of institutional investors. Finally, let's take a look at the charts which track performance of the stock and compare it to a benchmark like the S&P 500. There are 2 charts to look at here. This first one right on the summary page shows Microsoft in black with NASDAQ, S&P 500, and Dow Jones right under it, and you can clearly see the stock outperforming all the indices when looked over a 3-year stretch. Here's another chart I want to show you. This one is a 5-year time frame, and it shows Microsoft, the S&P 500, and NASDAQ, and again clearly showing Microsoft outperforming both indices by a wide margin, especially since 2019. The little D's in there, by the way, is when dividends were paid out for you dividend investors out there. Okay, finally what I wanted to show you was the analyst reports. After you do your own research and come to some conclusions about the stock, take a look at what the professional analysts are saying. You can see right here that virtually all of them have a buy or accumulate recommendation on Microsoft, which is not surprising considering how Microsoft has been on such a rise in the last few years. Now, if you want to buy the stock, you can go right down here and make sure buy is selected, which it is. Enter the number of shares, let's say 10, and then you have to select the type of order, with the 2 primary ones being market and limit. That's right here, market and limit. And I want to review them, as this is very important. So a market order is an order to buy or sell stock immediately, and it's the most basic type of trade, one that most traders use. A market order is guaranteed to be executed or filled without delay, but the price it will execute at is not guaranteed, as it may change slightly if there's a volatile market that day. Market orders are filled with online brokers' in-house systems, and by law, the broker is required to give you the best possible order execution that is most advantageous or best for you, the client. So by its nature, a market order does not offer price protection and will execute at or near the current bid, which is the price you see in there, with the priority being speed of execution. So if it's a steady market today and it's a widely traded stock like Microsoft, choosing to execute using a market order is perfectly fine and will generally lock in the price you saw when pressing buy or sell, or very, very close to it. So let me now go to a limit order by clicking this down, and a limit order is a complete complete opposite of a market order. Instead of guaranteed to buy or sell, it is completely price driven and is an order to buy or sell at a specified price only. That's why you see this entry for a price. In practice, this means a restriction on the maximum price to be paid or the minimum price to be received. If the minimum or maximum price target is not reached, the order will not execute, making a limit order 100% price protection type. Okay, so to finish off this video, let's take a quick look at another stock. Microsoft was admittedly low-hanging fruit in the sense that we knew it was a hot stock that was performing extremely well, and if you wanted to buy shares in it, you probably just buy shares in this case, though you should still do some research. What about a company you don't know much about and research really becomes very necessary? Well, let's see. Since we're in a computer and software mood, let's take a look at an oldie but goodie, a company that was once a giant in the computer world, but one that you may not have thought about at all in recent years. IBM. How's their stock doing, and is it a smart buy? Let's find out. I'm going to pull up IBM. And there it is. They trade on the New York Stock Exchange, ticker symbol IBM, no surprise there. They pay a healthy 5.23% dividend, and their bid-ask is pretty close together, just 2 pennies. So there's agreement on the stock price. But look at beta. It's relatively volatile at 1.2, and the percentage held by institutions is much lower at 56% compared to Microsoft. Look at their trading volume as well, 2,228,000. That's relatively light for a company of this size, but still acceptable. It's over 1 million. Now, looking at IBM's 5-year chart performance, it seems the stock significantly underperformed the S&P 500 and the NASDAQ. And if you look at analysts, they don't seem to be too bullish on the stock either, with most of these being hold and kind of neutral on IBM stock. So what's important here is not to pick on IBM, but to show you how you need to, at a minimum, look over all the basics I just went over before making a stock purchasing decision. Okay, so hopefully you got some value out of this brief tour of stock evaluation and purchasing. As always, be sure to subscribe and hit that like button, and also let me know in the comments below what topic you would like to see me discuss in detail. Thanks for watching, and I'll see you all soon.